What's up, everybody? So today we're going to talk about eBay. eBay. I know what you're thinking. Boring boomer company. And I know. It is. It really is a boring boomer company. But just give me a couple of minutes, you're going to be rushing out to buy this stock. So if you were like me in 2020, you were probably faced with stores being closed or long queues at the supermarket where you had to fight people for toilet roll and tin goods. All of that made millions of us switch to online shopping, whether for groceries, clothes, or electronics. Most investors know that this period was amazing for companies like Amazon and Alibaba and Etsy. But there was one company that was even more saved by the pandemic, and that is eBay. And today we're going to consider whether this is one stock which is just going to fall off in 2021, like so many will, or whether this is a stock really you should be rushing out to buy it today. So if you've been living under a rock for the past 20 years and you don't know who eBay are one of the world's largest marketplace for connecting buyers and sellers worldwide. They literally sell everything. The company has a number of sites, but it's most famous for its website, ebay.com. Its platform enables users to buy, list, sell, and pay for a variety of items, whether online, through their mobile app, or through their offline method. eBay is big, really big. In 2020, they did over 100 billion of gross merchandise volume, which basically means that over $100 billion worth of transactions took place across all of their platforms in the year. That is huge. Their business model is so easy to understand, and literally, they make money from when a sale completes. But they also make money in other cool ways as well. They generate revenues from managing payments or from selling advertising space. But put simply, the more eyeballs they get to the site, the more people that transact, the more money they earn. And despite this simple business model, eBay have competed in the auction space with a near monopoly. And hey, I know people are going to be like, they're just a small version of Amazon. But yes, I know they're competing in this area. But they have a number of key strengths that I believe sets eBay apart. Retail is a really tough market to succeed in. And with so many competitors, and with the auction market stagnating and growth stalling, eBay have been forced to change their business strategy, refocusing their attentions back to their core business. And after revenues were flat from 2018 to 2019, the COVID-19 pandemic fortunately restarted their business. And last year, they generated total revenues of $10.3 billion, up 19% on the previous year. In fact, revenue growth for their core business was up as much as 23% from 2019 to 2020. And yes, I know what you're thinking. Other companies like Etsy are seeing far greater growth. And that's true. Etsy saw a growth of around 110% in 2020, which when you compare to 23% is much, much more. But you have to consider, eBay is in such a different stage of its market growth. I mean, eBay is a mature business. It's been around for 25 years. It's not going to grow at the same levels every single year. So to see 23% growth in 1 year is astounding. In fact, eBay's share of the US e-commerce market is around 5%. And they were only just beaten into third place by Walmart, who owns around 7%. And in total, eBay brings in around 167 million users each month. So for an old boomer company, it still has a lot of traction in the tech space. And I mean, people do like eBay. They had a recent survey in the US, and eBay was ranked the most popular marketplace in the country with a 6.5 point score out of 10. Quite astounding when companies like Amazon were in 7th place. So clearly, eBay's management is doing something right. Well, just like so many mature businesses struggling, its first move was to sell off all non-core assets to unlock cash. They firstly entered into a definitive agreement to sell their classified ads business to Advinta for $2 billion and 540 million shares in Advinta, which brings the deal to around $9 billion. This was a very smart move because they're only losing around 200 million of revenue, which is around 10% of free cash flows, but they're generating a lot more cash up front they can reinvest into other areas of their business. Next, in February 2020, eBay completed the sale of their StubHub business to Viagogo for just over $4 billion US, a deal which they literally could not have timed better. as the pandemic crushed the ticket resale business for large events. Being flush with cash, eBay could have reinvested this into new areas or bought Bitcoin, but no. And so the first thing they did was a very smart thing, was they paid off a lot of their outstanding debt and refinanced it, such as in Q1 2021 when they redeemed a $750 million note. But for eBay's point of view, it was a great deal because it saved them over $45 million a year in interest. At the end of 2020, eBay had $7.7 billion in outstanding debt, which is easily serviceable through eBay's operational cash flow. The next boomer thing they did increased their stock buybacks. And since 2020, they've repurchased over $5 billion of their common stock through their stock repurchase program, with a further $6 billion remaining available. In fact, eBay can be considered as the luckiest company in 2020, as not only were they able to dispose of their assets at the peak of the market, but due to the pandemic, they were able to buy all these shares back at the lowest point when the market was crushing their share price. So on average, they bought their shares back for around $39. And when you compare this to the price that they're trading for today, which is around $60, they've made a really good profit from this alone. Another thing I really like about eBay is they've just started to pay a small dividend of around 18 cents per share, which is around a 1.2% dividend. This is extremely unique for a tech company, and it is very attractive for me as a long-term stable investor. eBay also have a really interesting future ahead, as one of their revenue streams is the facilitation of payments that occur through the platform. The large majority of these were handled by PayPal, which they acquired for $1.5 billion back in 2002. However, after it was decided that eBay and PayPal were going to split up, eBay had to go out and find a new payment processing partner. So in 2020, they came to an agreement with Adyen processing all of their transactions. And although this was questioned at first, this has been incredibly beneficial to eBay. This partnership has many advantages, such as eBay owning risk management, offering improved checkout features to optimize conversions. Then there are additional opportunities down the road that eBay can look in, such as consumer financing, digital wallets, trading crypto, and mobile stores, which they can now do with their partnership with Adyen, something they could not do previously with PayPal, as PayPal owned all the data for the customers at checkout. But in my opinion, the real sweetener was that as part of the deal, eBay is entitled to acquire up to 5% of Adyen shares through warrants. When Adyen is valued at around 60 billion euros and growing rapidly each year, these warrants will continue to rise in value. I think this is a really interesting exposure to one of Europe's hottest tech companies. So significant growth of core revenues, reduction in debt, increased share buybacks has been loved by the market. And this has been reflected in eBay's share price throughout 2020, having hit an all-time high of $64.85. Another great sign is that this stock is held primarily by institutions, holding around 92% of shares. Another thing I like about eBay is it's traditionally not been liked by analysts. Even in the recent tech sell-offs, I still believe the share price is massively undervalued, as in my opinion, the market is not properly pricing eBay as a technology company, accelerating revenue. Although I've been bullish so far on eBay, when I researched this video, I noticed that there are bears everywhere about it. So in order to give a balanced analysis on this stock, I'm going to consider what the detractors are also saying about it. By divesting from non-key assets, paying down debt, and increasing share buybacks, this is a move of a value company and not something that Wall Street or retail investors want to see from a tech company. This is seen as a very defensive play, but it doesn't fill me with a lot of confidence they can grow their future revenue. Yes, the Adyen warrants might give them some upside, but this is not going to be enough to make the share price go stratospheric. Companies like Amazon and Alibaba have a plethora of products, but to me it seems like eBay has nothing else. This is their only move, which is fine at this moment in time because the pandemic is helping their business. But when things go back to normal, can eBay survive? This exceptional growth seen in 2020 will not sustain when the vaccine have been administered. This could even reverse if larger competitors like Amazon or Alibaba, companies with far greater analytics and logistical services, put even more pressure on eBay. eBay, for one, doesn't control their inventory. Neither does it ship them, meaning they have no control of their customers' experience once the deal has been completed. This is the opposite of Amazon, who control their full sales process and so can manage their full customer experience from start to end. eBay has tried to deliver and implement Amazon's fulfillment centers in the past. However, these plans were shelved as it simply cost too much money, and eBay did not want to invest in this infrastructure. This is one of the reasons why I'm so bullish on Amazon and Alibaba, as these companies have built their foundation so deep that they can scale up much faster. And companies like eBay are now struggling. And although they've improved their ability for items to be shipped by third parties, it's still a long way off where it needs to be. In an effort to increase their gross merchant volume, eBay has tried to force their customer experience on their platform, usually at the detriment of sellers. Something that can be seen with eBay's money-back guarantee, where typically eBay will automatically side with a buyer, irrespective of the evidence, and can lead to the sellers not getting paid or having their items not even be returned at all. I am both an eBay buyer and seller, and I've had a number of experiences when I've sold something and done nothing wrong, and the buyer has complained or said there was something wrong with the product and kept it. And every time I say that I'm not going to use eBay and I close down my account, only having myself to reopen my account as I realize they're the only players in town. I'm also pessimistic in the direction that the management has taken the platform in. For years, eBay was the place to go for buying and selling used items in an auction-style environment, and they literally had no credible competition. But since the explosion of the e-commerce, they've moved their sales away from auctions more to this buy it now offering, which has flooded the market with cheap, repetitive products, removing any form of uniqueness or charm from the platform, which was one of their key elements a lot of Amazon and eBay businesses sell across both platforms. One saving grace is that eBay tends to be a bit cheaper, and this was confirmed recently in a survey when it was found that eBay had better prices, and this was the main reason why people were leaving other platforms and coming to eBay to shop. The concern here is that if any other platform comes in with lower prices or incentivizes sellers in a better way, eBay's pricing could be undercut. And when you compete just on price, it's a very slippery slope and not something that you want to build the foundations of your business. Twin with limited developments to their platform, they will continue to lose clients to new creative platforms like Etsy, or will lose cheaper customers to platforms like Facebook Marketplace that can offer better value to both customers and sellers. Another negative is eBay's business model. It's so dated. Maybe back in 1995, customers were easier to please. But today's customer is much more in demand, whether it's streaming content or ordering a meal. We want it now. So with Amazon creating an amazing user experience, customers are used to this buy it now, get it tomorrow philosophy. So the idea of waiting 7 days to see if you've won an auction, to then wait a further 5 days for the seller to post the item before you receive it, is not the trend that people want. This trend is clearly an issue for analysts, who are thus believing the future sales of eBay will steadily decline. Hence, the more modest valuation on eBay's stock price today. Although I'm bullish on this stock, I do believe there's further pressure on the share price. eBay's fifth largest shareholder is its founder, Pierre Omidyar, who owns around 3.5% of the company. Since his departure from the board in 2020, he has been rapidly selling his shares, as he is now focusing his life on philanthropy through his Omidyar Group organization. As there is a risk that he will continue to sell his stock, I feel that this could put further pressure on driving it to low. In conclusion, I think it's safe to say that management has built eBay into a premium company. It has a brand name that is synonymous with what it does. It has an excellent balance sheet with manageable debt, and is easily covered by their cash flows. So I don't think there's any signs of them going bankrupt. Position their company very well, selling out of non-core areas for peak prices, and have bought shares and refinanced capital, all which should help the long-term longevity of the business. They now have cash to expand into new areas or develop their existing offering, and the deal with Adyen, especially with the warrants, is very smart and makes me want to invest. Before I go crazy and stick too much money into this company, I have to understand that there are some concerns. You don't need to be an analyst or have gone to Harvard to understand that they simply got lucky in 2020. And before the pandemic, they were on the way down. 2020 saw most small businesses and stores close, with initial mass pandemonium and lengthy queues at stores, forcing people to shop online, which helped reignite eBay's lagging sales. But I believe that if they don't innovate or improve their offering, they may lose market share on a variety of fronts. They can't be as big or as analytical as Amazon, as creative as Etsy, or as simplistic and cost-effective as Facebook Marketplace. And so I will be watching for future GMV and total revenues. However, I do believe that eBay are going to be one of those tech companies that just stays around. It's really good at what it does, and I believe that management will stabilize sales. This should provide enough cash for them to grow their sales in the future by reinvesting in their platform, something which they need to do. There's always the upside the pandemic lasts longer than people expect, or that buying online actually grows more and more, all what helps eBay to continue to see this further growth in their revenue. However, as eBay trades with a lower PE to its competitors, I do think it's undervalued, and especially how it pays a dividend, I am looking to deploy a small percentage of my portfolio into this stock. Thanks for watching. If you have a comment, please leave it in the section below. I do reply to all of my questions. Take care and have a great day.